Insurers have had a tough time during the credit crisis. Many, including Allianz and AIG, have posted losses. You know that. Zurich Financial, however, has stayed profitable thanks in part to its North American business, which mostly operates here in the U.S. under the Farmers brand. Mike Foley is North American chief of Zurich's commercial unit. He joins us here in the studio this morning. Mike, thanks for being here. Quick question. Let's start with AIG because that's such a big topic. Zurich has had some success at AIG's expense. You hired AIG executives. You even bought their auto insurance business. Tell me, is AIG still vulnerable?
Well, I think actually a number of our competitors actually, in challenging times, AIG has never been vulnerable in its claims-paying ability. I think actually the question is, what's the long-term strategy for the firm? So it gives us opportunity to be out in the position in the marketplace, describing our financial strength and stability, attracting talent and clients.
How much of a game changer is AIG hiring Bob Ben-Moshe? Obviously has a long history at Met, did very well there. How does that change the competitive landscape?
I don't think we see that as a major shift in the competitive landscape. It really comes down to the underlying health of the firm and the risk management capabilities of the insurer that you're putting your faith in. And we think that Zurich has really come through the financial tsunami of the last year, strong and stable, 26 consecutive quarters of profitability.
How about business conditions in North American commercial insurance right now? What are they like?
So insurance is really a critical enabler to the overall economy, and so we see our clients and the stress they're under in terms of we're leaders in construction and automotive dealers, for instance, so we see less cars on lots. We see less projects happening for construction companies. So we see the lower exposures of our clients. The flip side of that is they actually still look to insurers as a key part of managing their overall risk.
Are they cutting back? How is the recession, for example, affecting your pricing power?
Actually, we've seen rates increasing for the last couple of quarters, and the trade-off...
Likely to continue?
We think it is, actually, and that's because of the new reality, which is if you're managing your business as an insurer and trying to match your assets to liabilities, earning your core profits off of your risk-taking, then you need to actually get more rate to cover the decreased yields in the marketplace.
Your CEO, Jim Shiro, recently told us now is the right time to make acquisitions. I'm sure you've heard him say similar things. What kind of M&A opportunities do you see in North America right now?
I think we've always said that we're out and we're willing to look at opportunities for both organic and inorganic growth. We obviously just did the acquisition of the AIG direct business for farmers, which was a great strategic add for us because it fit into a distribution channel that we were trying to build out and get strength in. So when the right opportunity comes along at the right price, we're willing to look at it.
As you probably know, credit rating agencies have raised some concerns about reserves for your U.S. commercial lines. Are you guys prepared to raise those reserves in order to address those concerns?
No, not at all. We actually think that we've taken a very conservative approach to our reserving. We've done this for several years now with the Zurich way of reserving at the global level, and we've really been quite careful and prudent in our reserving over time.
Why is Moody's then uncomfortable?
I don't know.
Well, it's got to be a concern. An insurance rating is a key part of, rather a credit rating, a key part of an insurance company's business.
It absolutely is. I think our ratings are strong and stable, and they see us as a financially stable firm. On the reserving side, what we've tried to do is reserve conservatively in recent accident years so that we can look to, over time, have a healthy reserve profile.
Mike, thank you very much for joining us, taking those questions. That's Mike Foley of Zurich Insurance.